So we've got this big Fed meeting coming up on Wednesday. We've been talking about it for a week. We're going to have Ira is going to come in the next couple of days. I sent him an email this morning, and I'll text him a little bit to get him see what his response is. But Ira is going to come in and preview this Fed meeting for us. It's very, very important for setting the course and what the Fed is going to do. I don't know if you guys were able to see or watch Tudor Jones's interview on CNBC just a little bit ago. It was outstanding. I've got to watch it again. I was getting ready for the morning, but I took some notes. Well, I'll go through it later, and I'm gonna watch the thing, and I'm gonna watch Tudor Jones's interview in its entirety. But one of the things that I thought was highly important, or very important, is he was talking about the bubble that we're in. You know, and the Fed decision about tapering and what they're going to be doing is going to be incredibly important. And we'll let Ira talk about this because I'm not the macro analyst. But what put it in my mind is this, we are 200, let me just read from my notes so that I don't end up screwing it up. But the stock market is 220% of GDP, 220% of GDP. Which is 60% higher than it was in 2008, 40% higher than it was in the 2000 bubble, and 90% higher from the top of 07. All of those things, while we're opening up in this is going to be, if we open up here, this is going to, in 36, 37, this is going to be an all-time high open, an all-time high opening range. Holy moly. I got to think that everybody's going to be getting short here. I'm not going to get short here just because it's going to, because we're at an all-time high open. And I'm also not going to get short. Tudor Jones also talked about this. I'm also not going to get short in front of an all-time high open, in front of a Fed day. And I'm not going to get short because of my opinion or my bias. And I'm not going to get short because of those awesome statistics. Those really struck me, the 220% of GDP, the stock market, 80%, 90% higher than previous bubbles. It's amazing. It's amazing to even think about. But because I'm not a macro trader, I'm not, that's not what I'm going to do. I'm going to trade the price action as it is in front of me. So today, because it's also the first, it's still in rollover. September is just now, and all of the indices has now become the front month. I'm not going to be aggressive today. I'm going to give myself 2 attempts. Oh, there's 25 people in here, so I got to go off camera. I'm not going to be very aggressive. I'm going to take 2 attempts today, and that's it. If I catch it easy, I catch it. If I don't, I don't. Because I don't think we're going to do much. I think that today, I know that today and tomorrow are going to be dangerous days for a lot of traders. Now, they also could be easy. If we open up and we go lower, then that's fine. But a lot of traders are going to trade their opinions today because of the interview, because of the stats that Tudor Jones had said and pointed out, and because of the way that the market is trading up here near all-time highs, or just below the previous all-time high. Now, that's it. I'm not going to be looking at being aggressive here. I'm just not. This is not my favorite time to trade. This is not my bailiwick. Also going into the Wednesday morning. I was coming in Wednesday morning, which is perfect. So I just got the response. I was going to come in Wednesday morning. He's in New York now. So another thing to point out is I've never had, most of you guys already know this, I've never had my best trading day on a Fed time. I've had my worst, financially speaking, I've had some of my worst days on Fed move. So I'm not going to be aggressive in these markets. I'm just not. Now, crude is back above that 71 handle and itching to get up to that 72 level, or that $72 level. Let's keep an eye for the first big target up there is going to be like 72.35. So if any of you guys had anything on the long side as it came out of the opening range and went up to try that first target, keep an eye on that level. 72.35 is going to be the next draw, like a magnet. The market is going to try to pull it up to that 72.35 area. All right, now we've got we're looking for 72 in the indices. I'm sorry, 42. We're looking for 42.70
to 80 is going to be the draw up there. 42.72 is going to be the upside target. Okay. I actually had 42.78, but we're going to lower it to 42.72 in front of these levels. Today, for today's purposes, our targets have been rounded down to 69 to 71. So that's going to be the upside draw in the S&P. Otherwise, there's nothing I can really say about today outside of, I don't see, I'm going to take 2 attempts, and if I don't find it easy, I'm not going to trade it. There are too many things that I don't like about this market. I don't like the fact that we're in rollover. I don't like the fact that we just now moved from June to Sep, today at least, Friday we did too, but that was while it was rolling. There's still a lot of open interest that needs to be rolled. I believe it well over 1 million contracts that need to be rolled from June into September. I'm just not looking to in the September S&P. I'm just not looking to be aggressive today, and not to mention the fact that we are in front of a 2-day Fed meeting. So Wednesday is going to be the decision. That's when we're going to see some volatility. So I prefer to wait, bank some spiritual and emotional capital. Capital preservation is the most important thing. The most important aspect of our trading, both not just physical capital, but also spiritual capital, emotional capital. And that's that. Okay. I'm taking 2 attempts. That's it. So, yeah, cut size, but I don't, when I'm talking about, let's talk about this too. When you guys are trading 4 lots in the micros, cutting size to a 2 lot, that's futile. There's no point to it. So if you're trading 4 lot micros, I would limit my round turns. I would not cut my size from a 4 lot. Yeah, the 4 lots are the minimum that I would trade. Minimum. I couldn't cut my size to anything less. Maybe a 3 lot, but at that point, what's the difference? The 1 lot, one contract doesn't really make much of a difference, right? So I'm going to look to limit my round turns. 2. That's all I'm taking. If I find it easy, then that'll be nice. If I don't, well, you know what? It's a nice sunny day. I've got one-on-one mentoring to do, and I got a whole lot of work that I'm behind on. So that's it. Otherwise, that's all. I mean, there's nothing more to say. There is no real reason to even put this out there today, Peter, outside of just saying, if you're trading more than 4 contracts in the indices, cut your size. If you're trading 4 lots in the indices, I would suggest to limit your round turns. Now, I know that some of you guys aren't going to listen to that. I know that some of you are going to overtrade it. I know that. I mean, it happens inevitably. It happens all the time. But take 2 attempts. Sit, wait, and if you see something that's clear, last night we went over a lot of information that we talk about all the time, but we put it all into one. I put it all into one conversation. 3 rules of engagement, 4 pillars of capital management. If you see something, if you have clearly defined trade definition, go ahead and take the trade. If you see something clearly, go ahead and take the trade. If you know the 2 most important parts of any trade, then go ahead and do it. But then employ or deploy the 4 pillars of capital management. Go ahead and minimize your risk, remove your risk, maximize your profit, and exploit it. If there is such a thing to do today, it's always interesting to see the traders that are asking, should I add here? Should I add here? In the markets that don't call for us to add, everybody's so, keen on adding in quiet markets. When we have the volatility that the market is instructing us or telling us, this is the place to add, this is the market to add, we're sitting on our hands. It's, those are the days that we need to learn how to do it. So we give time, we give the market time, and we work towards taking steps forward so we can be better traders. We can do better, be better. It's not easy. And it doesn't happen, quickly. But don't try to make your fortune today. Don't try to do too much today. In fact, this week is not a week to make your fortune. Let the Fed decision on Wednesday, let that settle. Let the market absorb it. Let that volatility become clear. And then Friday, Friday, going into next week, we're going to have all new targets. We're going to have big new macro targets based upon Friday's expiration. Our targets are not going to be found on charts. Our targets are a result of where the CME group settles the indices, where they settle what the settlement price is in the equity markets. And then we produce a whole new set of targets and we'll have some clear momentum. The reason I've been saying, and let me go over this real quick. The reason I've been talking about how and why the NASDAQ has absolutely no direction, no clear direction, is because we talked about this on Friday, but since many of us are here, last September NASDAQ expired. I might be wrong on the dates, but September NASDAQ expired at, I believe, 12,808. Or no, that could have been December, 12,808. The yearly opening range was 12,880. And then March expired at 12,800. That gives us an upward target of like 12,806. Nowhere. Yet, you know, even though I say that the NASDAQ has absolutely no upward momentum, or I'm sorry, the NASDAQ has no clear direction, no clear goal, you know, where the market is going to kind of magnetically pull it up. So many of you guys have wasted money trading that market. When in the S&P, those targets or those prices are 37.23, which is December's expiration, the yearly opening range 37.48, and then March expiration 39.12. So just based on expiration, we had a target of 39.12 based off of September and December. We generated a 39.12 target that ended up being March's expiration. Why you guys don't want to, you know, learn how to do this is beyond me. That gave us clear risk definition. It gave us a clear target that the market was going to pull up in a magnetic fashion up to 39.12 from 37.26. I can't remember the last number, but that 37.25, let's just call it that. Then the yearly opening range of 37.48. We had already generated that target of 39.12 based off of September and December's expiration of last year. That became March's expiration. That flipped us then up to the newer target for last quarter was going to be 41.14. Well, we got there. We had clear definition. Remember, so, you know, the S&P's target was 12,806 or 804 or something ridiculous like that. So I want to trade a market. Now, if for some reason the S&P has a settlement like that, and the NASDAQ has clear trade definition, has a clear upside and downside target, I'll trade the NASDAQ more heavily or more often. I want to trade the market that has not just the, not just the price action that suits me, but I want to trade the market that has a clear direction, that has clear directional movement. And to me, that's the S&P and not the NASDAQ. I want to trade the markets during the time with the most heavily traded volume. I want to trade the markets when the open interest has rolled most heavily into the front month and not when it's, you know, in between. I want to trade when the markets have the clearest risk definition. And I want to trade when I have really, really clear directional movement, one way or the other. At least prices that are going to give me on a macro level, as I described 39.12 was, and also then, you know, on a monthly and on a weekly and on a daily level. I want to trade the markets that have some clear targets. Now, the NASDAQ, although it doesn't have any real macro direction, you know, the NASDAQ, that doesn't mean that the NASDAQ isn't going to have decent price action once it follows suit with the other indices. You know, once the market is going to drag it to where it's going to go. It just means it's not going to lead. The NASDAQ had led the markets on the upside for a very, very long time. The S&P's lagged. Now the S&P, now the action is in the SPOOs and the Russell. The NASDAQ is third. So let's keep those things in mind. I want to trade with I want to trade during the times with the most heavily traded volume. That's going to be regular trading hours. I want to trade where I have the clearest risk definition. That's going to be the opening range. I'm not going to trade necessarily at 8:30 and 40 seconds, but using the opening range as my clear risk definition, going from target to target to target. I want to trade when we have, in today's case, when the open interest is most heavily in September as well. And while that's, happening, while we're in the midst of rollover, I just don't want to trade it. And while we have, clear momentum, or we're going to have that off of the Fed meeting on Wednesday. So all of these things, maybe it turned out to be a pretty good, decent conversation, or decent weekly opening discussion. But, all of those things are telling me to take it easy today in the markets. Take it easy tomorrow in the markets. Take it easy Wednesday until after we get our Fed meeting, our Fed decision. And then I'll be looking to, by that time, September S&P by Wednesday, still going to be in rollover, but for the most part, the roll will be finished. We won't have any new generated targets, but we are going to have the other four bigger macro issues resolved, right? We're going to have the risk definition on a daily basis, and we're going to have everything else. We're just looking to generate the new targets, and that comes Friday. That's going to be the two most important parts about this week: Fed decision and expiration prices. Quad witching on Friday is going to be fun, and traders love that volatility. Scalpers do, but I'm not a scalper. I don't know anybody that is really good at scalping unless you have, I don't know. I just don't on the screens. I think it's very difficult to buy 42.37s and sell 42.38s 150 times without getting run over. Anyway, it's a completely different topic and a completely different discussion. So, does anybody have any questions about any of that before we jump into the other room and start to go at it? We had a wonderful weekend this weekend. I'll talk to you guys more about that today. Beginning on Thursday, going into Saturday morning with Mark and Adam flying into the city. I'm truly looking forward to sometime later on in the summer or maybe fall when we're able to get together, have a PAX group get together in Chicago when we're all can just be together. I'm going to also coordinate that with Ira so that we can make sure that we have Ira here as well. And kind of figure out what we can do and where we can go. So that'll be fun. I mean, we really did have a wonderful time. I'll tell you about our dinner on Friday night at Bellanote. There was some funny things that went on there. Some great conversation on Thursday. I saw Terry Duffy. I really don't think Terry recognized me at first, but I've also lost 20 or 30 pounds since I last saw him, and I'm much younger looking. All right, everybody have a great day. Take it easy. Today's not the day that you're going to make your fortune. I'll see you in a minute.